All right, today I'm joined by Alex Wesdorf, an expert in individual disability insurance with years of experience helping businesses and high income professionals protect their most valuable asset, their ability to earn. Alex has spent over a decade working with financial advisors, benefit brokers, and business owners to design disability solutions that go beyond traditional group coverage. We're diving into why CFOs and HR directors should rethink disability benefits for key executives because most group disability plans don't fully protect high income earners. If you have a highly compensated leader in your organization, they might be exposed to significant financial risk. Alex, welcome to the show. Give us a little introduction about yourself and your background and years in the business.
Yeah, man. Thanks for having me this morning. So I'm originally from Minnesota, so I'm a huge Vikings fan. So I'm really excited about over the last 12 hours, we actually spent some money that are actually on people that are not the punter. I got into disability insurance. I feel like this is every insurance person, but I got into the business by accident. My buddy told me about a job, 7-ish years ago about individual disability wholesaling. Prior to that, I had done about 4 years on the group benefits side, quoting group insurance plans, looking at LTD contracts day in and day out. So when your fourth quarter is hell, it was also hell for me because I was running all the quotes, for benefit brokers in my territories. But married, 4 kids, been married almost 10 years, 4 kids, live in Des Moines, Iowa, and I eat, sleep, and drink disability insurance. So I'm a nerd to a degree for sure.
Well, thank you. That's a cool introduction. Well, the reason I wanted to bring him on the podcast was because as a benefits consultant, we're kind of so swamped in medical that we often overlook the ancillary lines, the dentals, the visions, and life and DIs products. And you typically will have 3 to 5 high income earners in an average group, and your key executives are capped out on your traditional group plan. We were just talking. Most group plans have a 10K, 15K cap.
Yep.
Maybe we can get a 20K cap, but if you have a true high income earner, they're capped, and the way they're going to find out is when they go file a disability claim, and they're like, "Well, hey, what's this?" And just keep in mind, if that gets taxed as well, then they're getting even less than what they were thinking they're going to get earned. So just talk to me why CFOs and HR directors should care about looking at individual disability for high income earners.
Yeah, I think number one, like you want to, I think in HR today or just business owners today, they're looking at how do I retain my top talent? And so if you don't give the CEO, the top income earners the same plan design necessarily as you do like a individual or a group disability plan, you should do more to retain that top talent, just like you do with compensation in various ways, whether it's stock options or bonus structures or any of that stuff. So, if you're giving 60% to 10 to everybody, the problem is that you are hurting your top talent because they make too much money. So again, 60% to 10, that means anybody making over $200,000, they're getting less than 60% of their monthly income replaced. So the rank and file, someone like myself who's making less than $200,000 at this company, for example, they're getting 60% of their income, which they still have a gap, but there's even a bigger gap as you make more money because every group LTD plan has that cap. So CEOs and HR people should look at these because it's affecting their top talent at their company and they're not even realizing it.
No, that's key. And the awkward part for consultants is sometimes we're taking over business from another broker that put the plan in place originally, and we're so focused on the health benefits because that's where the
Yep.
big ticket items are, but we're
Yep.
just overlooking the low hanging fruit on your side of the table. And that's why people like me decide to partner with people like Alex, because we need an expert to say, hey, what are the options in the individual disability world? What's the kind of GI limits we can get? Talk about what a typical group can get from a guarantee issue basis, or what they can do for a small executive team.
Yeah. So, a guaranteed standard issue is a growing conversation in the industry. Unum's always been around, but now other carriers like Principal and Standard and Mass Mutual and even MetLife is in this space, Guardian as well. But they're looking at least 5 lives above that LTD cap that will be on these plans. So guaranteed standard issue, no medical underwriting, right? They're individual policies, so they have the definitions of an individual contract. There's no rate guarantee or 2-year rate guarantee like your LTD will have. they are locked in on the price tag for life if you make no changes to the policies, up making them go up in a sense, and they're fully portable. And so it's a great way to come in with no medical underwriting and census enrollment for these companies that are used to what you guys are doing on the group side, right? We census enroll, it's really, really easy, it's streamlined. I would say that most people, again, if you're in the business you're in because health insurance is a nightmare for employers. It's going up in cost. They're not getting as much today, right? You guys are very big advocates. I see you and the other people in the health insurance industry, really big advocates today, which with different solutions, which is awesome. But the reason people have health insurance is because life happens, and so you know it's good to have health insurance, and you need a great plan, but something's got to pay for all that stuff. And so you can look at these guaranteed issue plans as a great way to restore that benefit back to at least 60% for your top earners and not have to do medical underwriting. So again, you need at least 5 lives, and depending on the size of the group and the premium from the case will dictate the amount they're willing to supplement on top of the group. So if you have 5 lives, you're going to get a $5,000 offer from the carrier. So that's $5,000 on top of that 60% to 10K that they're getting from the group.
Yeah, so you can stack benefits. Obviously,
Yeah,
you can't get over 100%, but you can
correct. Yeah,
close.
correct.
If you wanted to supplement up to 100%, you technically could.
You can't.
They
So
can't.
every carrier has an issue and participation limit. So the idea, like with life insurance, you could say, "Hey, I want $5 million," and if you make, $400,000, an insurance carrier is really not going to bat an eye. But income protection on the disability side, they're never going to fully replace your net take-home pay. The more money you actually make, the less money percentage-wise you'll get. So if you make 50 grand, the percentage that you'll get replaced is a lot higher than if you make $1 million. And the viewpoint there from the insurance carriers, if you make $1 million and I give you, $30,000 a month tax free, it's a lot of money. Like you can figure it out, kind of vibe. Where if you lose your money at 50 grand, you're in trouble, right? So that percentage is going to be higher. There's taxes that are involved, all that stuff. But so you'll never fully replace. Usually, maybe 90% of take home pay on an total supplemental value.
Yeah, you're never going to return to work if you're getting 30.
Yeah, if you're making money and you can sit down and watch the Masters or watch the free agency thing that we're having, and you're getting paid to do that, the probability of you going back to work is not very high.
So, what are employers doing from a? Are they doing this employer paid, voluntary, half half? What are we seeing from a industry norm?
I would say on the smaller scale, plan wise, like you're only going to see carriers offer employer paid functionality. If you get into the really, really big situations, then like a Unum will offer like a voluntary option. There are other carriers that will offer voluntary, but it's got to be usually a lot more lives. So if you have 20 lives on a plan, it's going to be employer paid. The carriers are not going to want that on a voluntary basis because the people that sign up are the people that are probably ones that are not doing well health wise, if that makes sense.
I always tell people that people don't value life and disability insurance like they really should. I think early on in my career, I didn't even really know what they were designed for. Obviously, as I started having kids and growing a
Yep.
family, that's when I have individual life insurance outside of my employer. We talked about individual disability for myself, and we're working through that right now. Um, but your average employee, they should look at their total compensation package, but in reality, they're not,
Right.
especially for your high income earners with stock options and car
Yeah.
allowances and sometimes housing allowances. Like, this is a key to getting people because like most high income earners, maybe that their spouse doesn't work. So if they're out of a job due to a disability, well, they have no income. Granted, they're most likely going to have enough savings to cover them for a period of time, unlike the person making $30,000 to $50,000 a year.
Right. Correct.
So it's like I feel like we're talking negatively about the person that's making a ton of money, but they made a ton of money in the career for a reason, and
Right.
we all hope that a 30 or 50,000 a year employee is going to grow into that high income earner in 10, 20 years. Um, but we kind of need to start shifting the perception of like, and this is our job as benefits consultants, is just like the value of this stuff is when we offer it voluntary, we barely get anybody to participate because it's like My sister-in-law sent me a message. She's got a new job, and I think her individual disability is like $60 a month, and she's under 30. And she's like, "Don't really need it. Not planning to have kids right now." And I'm like, "Well,
Yeah.
just get the short term. You don't really you can pass on the long term for right now, but as you get older." But what's key for me as I'm getting older and things aren't working the same in my body is the guarantee issue is like that's you know they're very beneficial for a lot of people. Then they got pre-existing condition clause. I'm sure they have that in your contracts. But what are like the tax implications of offering this as a employer sponsored benefit? Is there anything
Yeah, if
you?
it's employer sponsored, if let's say the group LTD is employer sponsored, right? It's going to be a taxable benefit once received. Usually you mirror that on the guaranteed issue side, right? So if you bonus up or gross up um, the group LTD, then we're going to gross up the GSI as well. So usually you mirror what's already in place on the group LTD so that it can be taxable or tax free. Doesn't mean you can't do the GSI as a tax free benefit, but I would say that they just need to understand what that is, right? If they're paying for it for their employees and it's not going into their paycheck on a gross up option, right? That's going to be a taxable event once they receive that benefit. So I think, going back to what you said about, people, unless they get married, maybe they start looking at life insurance, disability insurance. The reason people don't have it is because they're just not educated on it. Everybody knows people that have gotten cancer, has had a heart attack, has suffered through a stroke, whatever it is, MS. I mean, the claims are there. People just don't know about it, right? Everybody dies. We just don't know when. So, life insurance, once you get married or have kids or take on a bunch of debt through student loans or a house, life insurance is very easy to purchase. Like it's an emotional play, but disability is an educational purpose. Because, I mean, me as a wholesaler, my job is simply to educate the masses, right? Obviously, the business is written through my agency, but like I'm educating advisors on the gray area in a financial plan more than likely of like, hey, option A, they get cancer, they don't die from it. What's your plan for them, right? If you make $400,000, you got some money saved away, probably. Maybe not in America, but that money is not put away for the idea that you're not going to work. That money is put away for vacations, for a new home, for a furnace, for a new roof, right? That rainy day fund is not set aside so that with the idea that, hey, I'm not going to work for 2 years, right? So that money dries up pretty quickly. As we know, going to the doctor is very expensive. And so once you start going to the doctor more frequently for causes, it's going to add up.
I want to give a shout out to my friends over at Sunny Day Fund. I don't know if you've ever heard of them, but
No.
the concept is a lot of employers are struggling with employees dipping into retirement plans for external income, and that's exactly what's going to happen when someone doesn't have disabilities. They're going to tip it. They're going to dip into their retirement plan account, and they're going to exhaust all their resources. They're going to start selling off assets and
Yep.
getting by, or they're going to go into a Medicaid situation where you're not really getting that much from Social Security if you're permanently disabled. I mean, it's enough to pay basic bills, but you're living the same life. Um,
Right.
but that's a lot of employees are it's the education. I'm glad you there's a lot of consultants out here that we talk transparency and advocacy, and that's the end of the day. Yes, we get paid by insurance carriers. That's how we make a
Yep.
living.
Yep.
But if we're not educating our employee population on what they should do, the best my mentor when I first started in insurance said, I just want them to pick me and I don't really care about the solution. That's kind of the mindset I've taken to this is like, yes, there's going to be a solution out there for everybody, but
Yep.
pick me as your consultant. We're going to educate you on the things that are available to you. Because you got to think about a lot of groups will they'll have like an accident or critical illness policy or hospital
Yep.
indemnity, and that maybe gives them CI will give them maybe 20 grand if it's a lump sum benefit. Well, that's enough to maybe get by like a short term event, but if
Yeah.
that critical illness event takes you to 6 months, well, that 20 grand's gone pretty
Pretty
quick.
quick. Yeah.
So, that's what I told my sister in law is like, do the short term, you'll get, probability is you're going to be short for a short term incident. The long term is obviously more like higher odds because you got
Yeah.
to talk about like the definitions of earning because like everybody's like, oh, well, if I break one hand, well, I can still work. Like
Yep.
our business is very like my mind and my computer, and with phone texting now, like I could technically work.
Yeah.
But talk about the different industries that you support. Like obviously, physicians are a little bit different because like if they break their hand or arm, like law firms, what are you seeing from a, oh, this industry works and they get it?
Yeah, I think the number one purchaser of disability insurance on a private basis is going to be a doctor for sure. Like they're going to buy it in residency, and then probably number two is dentist. I think the misconception that I had prior to getting into the industry was car accident was the claim, was the reason why I should, buy this. That's, and 90% of claims on my side, you got to remember, if you break your hand, you're fine, right? Most of the carriers, the people that write the most business are white collar carriers, right? It's overwhelmingly the majority of premium. And so if you or I break our hand or break our foot or break my nose, like I'm gonna look ugly for a few days, but like I'm gonna come to my job. I'm not worried about you breaking your hand. I'm more worried about you getting diagnosed with whatever said disease, and it just continues to attack you to the point where you're just laid up in a bed and you can't do anything about it. Like I know some really strong-willed people. Like I think of like David Goggins, right? Like those kind of mindsets. But like at the end of the day, you're a finite human being, and your body can only do so much, right? The cancer doesn't care about you, so it's gonna attack you. And so for me, the reason I bought disability insurance is I knew people that had suffered through cancer. There's a guy in my church right now. He's been battling cancer for 3 years, been out of work for 3 years, 4 kids, stay-at-home wife. And he's probably gonna pass away this year, is from my understanding. But think about that. 3 years of not working. It's not a dude that didn't want to work, right? He's got 4 kids. What is he gonna do? So I think the definition of disability is or the idea, the claim perspective of disability is I'm going to break my hand, slip on my work job place. I'm not going to do that. I work at home, right? Like, I'm not worried about that. I think a lot of people are white collar working at a desk, and so therefore don't worry about getting hurt on the job. This isn't Aflac, but I'm more worried about you, that black dot that's inside your body. You don't know it's there until it's too late. If that
Yeah,
makes sense.
that's kind of the most questions we get about disability is going to be pregnancy, and like
Oh,
that's
100%.
only 6
100%.
to 8 weeks typically. Then after
Yeah.
that, I mean, my mother-in-law fell down the stairs and broke her leg for when we were going to Disney a couple years ago, and like she was out for a little bit, but she was in
Yep.
Disney World a month later on a scooter. But
Yep.
people, I guess people are not open to talking about the cancers of the world because it is like we all have someone that we know that had it, so they're like they hold that close, even though like, yeah, that's in my family. We don't talk about that. But my dad's adopted, so I don't really know my side of my
Yep.
history.
Your history.
I
Yeah.
should. Um, but I was 50 pounds heavier a couple years ago, and a lot of my family is type 2 diabetics, and that
Mm.
was always kind of a concern for me, is like getting older, getting heavier, and like your body's just not capable of, when you're 50 pounds heavier, your heart's pumping a lot just to maintain. So I think, I've seen a lot of people. There was a guy at Claim Doc, one of my vendor partners, and
Mm.
one of them, like,
Iowa.
yeah, like 30, 34 years old, I think, a couple kids, just perfect health, gym guy. And
Mm.
I don't know exactly what happened to him, but it's just very unfortunate that
Saw that. Yeah.
I feel like we're seeing a lot more, or with social media and things being more public than 10 years ago, we're seeing stories of people have really crazy things at younger ages than, you know, when I was in high school. I don't remember hearing these stories of,
Right. Right.
which is kind of concerning. But I think we're in just an age where people share their story, and that's what, I don't know if you want to talk about the GoFundMe side of our business, but I feel
Mm.
like that people in your space, that's kind of their first step, is to, you know, go that route and not even think about this.
Yeah. I think I've supported some GoFundmes already this year. And the problem with GoFundMe is it's not really a solution. Like it's a band-aid, and it's a really oftentimes it's a very small band-aid, right? Because let's say you get diagnosed with cancer. Um, People are going to rally around you in the beginning, right? But then they're going to go back to their regular life. Like that's just the human condition, right? Because you're not the one with cancer; they're the one with cancer, right? If it's especially if it's not like your immediate family member that you have that's dependent upon you, right? And so I'm going to give that money. Maybe I'm going to bring them some food, and then over time, as this thing keeps going, like people are not going to donate money and the bills are going to keep coming. So the GoFundMe thought process, like not everybody's JJ Watt and can just raise a bunch of money for the flooding. That's just not reality. A good GoFundMe, I don't know what the average GoFundMe is today, but that's a lot of people's mindset of like either my parents are going to take care of me or I'm going to have a GoFundMe. And I'm like, when people say that my parents are going to take care of me, I'm like, have you asked them about that? Are they willing to come up with the cash to fund you for the next year? I wasn't willing to offload that onto my parents. My parents don't have the kind of cash flow, and I don't want that burden. I said I'd rather have an insurance carrier pay for me. Um, so the GoFundMe thing, great. It's a great thought process. It is beneficial, but it is very, very temporary.
And I also think about from the critical illness side perspective that if those traditional voluntary benefits, their whole selling point is like, yeah, if you have cancer and you're in Louisiana and you want to go to MD Anderson, well, this is going to help pay for travel. But like, think about the travel it takes to have your wife and kids come with you and
Yeah,
stay at the hotel. We thankfully, my wife was in a sorority and they supported the Ronald McDonald House, and we had one on in New Orleans that I know they give room and housing to people where if their kids are at Children's Hospital. And like, not every situation is going to go exactly like that, where there's
yeah,
resources for you or that 20 grand you got from a CI plan. Like, you know, if you want to rent a hotel for a week, that's probably maybe $1,500 a week, maybe.
yeah, yeah.
So you're gonna burn that pretty quick. And a lot of these treatments are months
Expensive.
long. Yeah, expensive and months long. And I deal with a lot of most employers have a high deductible health plan, so we're talking your average deductible is anywhere from $5,000 to $8,000.
Yeah,
Well, most people that get diagnosed with something haven't probably hit their deductible yet.
right.
So one, they have to cover that amount, and that's kind of a culture shock. Obviously, once they hit their out of pocket, the insurance company's going to
Right,
pick up everything, but the
right.
insurance policy is not picking up the other things of expenses while you're dealing with and childcare too. Like think about your spouse is helping taking care of you, then it leaves the kids that are you have to find other help for. Um, but let's end it with this. If you're a CFO or CEO or HR director and they want to explore us, what should their first step be?
They should go to their benefit producer, because again, this is an added benefit that benefit producers can offer to them, right, with different carriers. So they can work with you to look at what other solutions are there. And again, you don't have to be the expert, right? You just have to ask the right questions. And again, when I work with a lot of benefit brokers, you're in the business for health insurance because that is the pie in the sky, and that thing is nasty, right? There's a lot of nuances of that you need to help employers with, but alongside that is the ancillary benefits. And I kind of see GSI, like guaranteed issue for your highly comp people, as an extension of the group LTD. So I would work with a benefit broker, go to the benefit broker, have them quote it out, show them a census, the same bit and gambit.
Yeah, and most benefit brokers, I know I'm talking about my competition, should have resources like Alex. Most of the
For
big
sure.
houses have individual departments inside it. Obviously, the problem that exists in our world is that some people don't like working with a five-person group because it's not
Yeah.
enough revenue to
Yep.
support that, and that's just the unfortunate nature about our business. However, Alex and I's both mindset is that we want to give that same attention to a 5 life employer paid disability plan or a 20, 30, or 50 life. I mean, in reality, you're not gonna get the perfect group and situation every single time, but
Right.
it builds trust, it builds relationships, and we just want to help people at the end of the day. So if y'all have any questions, Alex is active on LinkedIn. He posts a lot of stuff, very engaging, similar to me. Um, but yeah, I think we were going to leave it with you should look at individual disability just to see what it could cost you is not a bad thing because, like Alex mentioned, individual disability is portable. But if you want to
Yeah.
go start your own side project or start that business you've always wanted to start, well, guess what? You can't take your your group disability from your employer.
Right. Right.
So you need someone like Alex to help you if you want to start that business. And obviously, starting a business, you have a lot of other expenses
Yes.
to deal
Yeah.
with.
Yeah.
But a lot of people, get lost when they go do their side project or their big dream, and they're like, "Oh, well, I got to get health insurance." Well, now that side project's making money, you should really look here. And
Right.
unfortunately, we all know running a business is very expensive. But if you can't produce income to support your family, your business is
Gone.
zero, is
Yeah.
done. Um, well, thank you. Appreciate it,
Yeah,
Alex.
man. Thanks for the time.